Well, good evening, ladies and gentlemen, and thank you for being with me this evening. It's good morning to our friends on the east coast of Australia in the wonderful state of Queensland, and good afternoon to the rest of them down there, and also good afternoon to our friends across the ditch, and that's grand. Thank you. Mickey D's with us, of course, and says I'm loud. I could speak a bit more quietly, but if it's loud for everyone, just put a note in the question box, will you? And I can adjust the video. But you can hear me. That's better than not hearing me. So grand to have you all with us. Yeah, okay. Thank you. Mickey says normal. That's grand. I had lunch with Mickey the other day. It was absolutely fantastic. I don't get much time to spend with my clients, who of course are my friends. But we had a great day. It was really, really terrific. Okay, so lots of our usual cohort here. Glad to see them and appreciate their support. Albert Z, of course, Greg Palladini from California, Jeff, who's been a long-time member of the Danielcode. Good to have you with us, Jeff. And a new player, Jeff G, who's just doing his tutorial now. Good to have you with us, Jeff. Joel Goldman from Vero Beach, which was absolutely whacked in the present storm. So I hope you're okay, Joel, and survived all that. I know it made landfall very, very close to you at Vero Beach, didn't it? Horrible. Mark L's with us, of course. He's a stalwart. We can't start without him. Same for Mickey D. Nathan's with us. Noel's with us. Partho's with us. Good to have you with us, Partho. Terrific to have your company today. Peter Mack, who's not a day trader. Good to have you with us. He's a long-time member. Trevor, very important. Trevor's a very important Danielcode client. And so is Vicky, who's with us as well. And they're all coming in now. Okay, lots of you. Lovely to have you. The program just says waiting for name as you log in. And grand to have you all with us, folks. Okay, so Blood Moon, did you see it? I mean, it was absolutely sensational here, right out the front over the Pacific Ocean. We face east, and it was amazing. It was amazing. So I had to use that for today's title, a harbinger of despair, ecstasy, and mirth. And of course, there's despair and ecstasy amongst our leaders after the midterm elections. Lots of drama happening there, and mirth, particularly with me. I'm absolutely worn out counting the money we made last night, and I just couldn't help laughing at how brilliant some of those trades were. So we've had a huge, massive day, folks. Some of them have just been straight through trades. A lot of them have been flick me trades. Now, to get the flick me trades, you needed to have access to the TO3 plus signals, which you get on the Danielcode website Pro package of signals, and you needed to have been watching our webinars where I have talked to you on a large number of occasions about flick me. And we're going to see an awful lot of those flick me trades today, and I do caution you, don't try and do that with just ordinary counter trends. They work occasionally and they fail spectacularly equally often. But when you have a setup from a TO3 or TO3 plus signal, that has the rather magical propensity of getting everybody in the wrong way, including in particular the options guys. And options players are a very, very big part in our markets, and they are really the ones who are buying and selling. Puts and calls are pretty much grist for the mill. They're just there to be chopped up, basically. And Mickey D, pure ecstasy in T-bonds. You're $4,000 on the current trade in T-bonds, Mick. That's a big single trade for T-bonds, isn't it? Very, very nice. And wait till you see some of the others. But as I was saying, it's the Danielcode TO3 and TO3 plus signals that have that magical propensity of getting everyone wrong. And with the options guys in particular, once they get wrong, their stop loss or their closeout point is just about where the flick me signals fill in. So they become grist for the mill, and they just fuel the signal going on. You'll see all that as we go through, but just bear that in mind. They're very, very clever, but they only work in very specific situations, which you should know about if you have got PB. What's PB? Mickey, PB income. Oh, personal best. Yeah, wow. Well done. Well done. It's great stuff. And just getting better and better, isn't it, all the time? Okay, so let's move on to see all this excitement that's happening here. I am absolutely thrilled with that trading. It's just out of this world. So, you know, markets are rational, orderly, and sometimes predictable. And in a way, we can say that the flick me signals are predictable because you can see them setting up 1 or 2 or sometimes even 3 days in advance if you know what you're doing. And if you don't, you should do a tutorial and learn. It's very, very important to you. Now, no great surprise to see the equities rallying madly. This is from the last article I wrote for you and sent to you on the 20th of October. It was called The One More Thing, and it was talking about market turns. All markets turn and only at the Danielcode ratios. By using these support and resistance ratios, your trading will be a deal better. And I went on to say, finally, a close above 35.77 on the index, that's the dollar SPX, will confirm a key reversal bar on the 6-day chart, which completes its current bar on Thursday. A KRB from known DC support is a powerful directional signal. Additionally, the index has bottomed for now just a few points below the 50% retracement, and that may be sufficient for a while. And that was the 20th of November, folks. So I hope you all read that. It's on the front page of the Danielcode. You're most welcome to read it. And let me have a look. 20th November, that's getting to be a while ago now, isn't it? So there it is. Let's see. Here we are. There's the 20th. There's 7, 14. Yeah. 21, about 24, 25 days ago. So you should have known that the bias in this these markets was up in the equities at least. And I'm happy to have been able to tell you all of that and put you all in the right frame of mind. If you didn't read it, your problem. So this is exactly what I showed you at the time. This was a 6-day chart of the S&P Emini, which is now the S&P futures contract. The big contract's no longer running. And this is what I wrote at the time. Finally, a close above 35.77 will confirm a key reversal bar on the 6-day chart. Well, of course, we got that, and it's been up in the last 3 weeks, 6-day weeks, I call them. 6-day charts are the Danielcode equivalent of a weekly chart. So, News Corp and Trump. Rupert Murdoch has fallen out with Mr. Trump, and this was some time ago after his lost the presidency. There were rude words said, and despite what people think, he's a lovely guy. He's a great yachtsman, has been a very, very good sailor in his time, and Lachlan's taken that up as well. But I had the privilege some years ago of sailing at the Hamilton Island Regatta Week, and Rupert was there, and I had the opportunity of talking with him, drinking with him, and having a few meals with him. And of course, he's the powerhouse of the news, and what I've said here basically is that news made Trump, and news will break Trump. And if you follow what's been happening recently, they've decided, Murdoch's well and truly provided that he's had enough of Trump. He's sick of him. He's over that. Wants to see him disappear. Wants to see the Republican Party move on. This is yesterday's New York Post front page. I mean, how things change. Inconceivable that you would have seen something like this even 6 months ago, even 3 months ago. And this is just a very, very graphical demonstration of what News Corp thinks about Mr. Trump at the moment. And they recently re-employed, I think he's worked from before, Piers Morgan, who's a bit of a show pony journalist. And he wrote the article in the New York Post and says that the failure for the red wave to arrive had little to do with anything they did other than correctly bet that the issue of abortion rights would be a vote energizer for them, that's the Democrats, and everything to do with Trump's toxic stranglehold on the GOP, he wrote. I think it's a bit different to that. I think from my observation as a very, very interested outsider, of course I'm not an American citizen, I'm Australian, so I don't have a vote in America, but I do have an awful lot of interest, particularly as 99% of my clients are in either the United States or Canada. And Canada, of course, is also hugely affected by whatever's going on in their large neighbour. And I think that the red wave probably was building, but then 2 days before the elections, Trump couldn't stand it anymore, others being the centre of attention. He is such a narcissist, he has to inject himself, he has to make every situation about him, and that's what's annoyed so many people. It says he actually had some good ideas. He's got some very, very sensible ideas about government, but he's also got a lot of crazy ones, and particularly his own personal behaviour is the issue that just sets people off, sets them against him. 2 days before the election, Trump had to come up and say, yes, I'm going to make a very big announcement soon after the election, which everyone took to mean, I have no doubt quite rightly, his intention was to say that he was running for president, and I guess he probably will make that announcement in the next week. Apparently this weekend his younger daughter's getting married at Mar-a-Lago, which will not take up too much of his time, but next week we'll get an announcement from him. And it's a real issue now, and it started off as a murmur, and now it's become a roar that Ron DeSantis has done so well in Florida that he is starting to appear to be the heir apparent and not Trump. But anyway, Trump's a fighter. He's a great promoter. He's a great raiser of money, funding for these Republicans and largely for himself. So don't count him out yet. He's not going to be easy to dismiss, I'm sure of that. So here we are. This is the rest of the News Corp post that you can see. And Trump is the Republican Party's biggest loser, was the verdict of the Wall Street Journal's editorial board. Wall Street Journal, of course, is one of the Murdoch media papers. And they wrote a pretty stringent editorial about it all. And the key to what the arguments were all about is that some of these Trump-backed candidates like Oz, the Republican Party wasn't going to have them as the candidate. And Mitch McConnell, the leader of the Republican Party in the Senate, the old crow, as Trump calls him, is actually a very, very smart old crow. And he's been saying pretty consistently the Senate is different to the House and that character matters. The qualities of the candidates matters. And you saw that in the election. Poor old John Fetterman had a stroke and was gallantly battling on, but he can't form a sentence on his own. Literally, he has to be reading off a type of a teleprompter, and he's not a well man, and would have thought it was nearly impossible to lose to a man who clearly is unfit for service given his present health conditions. But Oz managed to lose to him, and as the lady journalist said, well, you know, he's a blow-in. He's not from here. He's from Jersey, and he's not one of us. So all those sorts of mistakes were made, but I think the trigger was Trump's announcement 2 or 3 days before the election. So this was Zero Hedge's taken it on. And Trump, of course, is trying to spin it as being he's still going to make a very big announcement on the 15th. And he said, he actually says his personal standing point, it was a very big victory, 219 wins and 16 losses. In the general, who has ever done better than that? Well, the reality is that Trump's got a habit of endorsing candidates who are going to win anyway. We're doing very, very well. That's the vast bulk of them. But these celebrity Senate candidates, that's where it all fell to pieces. And as they've commented here, other Republicans were not so bullish on what happened. And this is a gentleman called Doherty who sums it all up on Twitter pretty neatly. The one guy he attacked before the election day was DeSantis. And rage at Trump like I've never seen. So very emotional, as I say, lots of ecstasy, lots of agony, and some of it you've just got to laugh at. Okay, so let's keep going. The CPI print came in 1/10 of 1% better yesterday, and lots of people want to tell you that that's what set off the rally. It certainly contributed to it, but the narrative that the Fed has been reducing the rate at which they're going to be increasing rates, that narrative has been building for a couple of weeks. So if you were aware of that, look at this lovely trade here. You had a TO3 sell signal against the apparent trend, which was profitable, and then that set up the flip me buy, and the Dow just roared through that today. This is the Nasdaq, which was even more dramatic. It had its flip me buy. It's a TO3 sell signal, I say, at the close of Tuesday. That trade was elected on Wednesday, and today you got the flip me buy signal, about $8,800 per one Nasdaq mini contract. Pretty nice business, isn't it? And those you folks who play Forex, just been amazing, hasn't it? Have a look at this. This is the Aussie USD. Same thing. It had a TO3 sell into Wednesday. The flip me buy today, Thursday, whoosh, and off it went. And some of them were better. This is a different one. This is the CAD Chief Canadian dollar against the Swiss franc. And this had a TO3 sell signal 4 days ago, 5 days ago, and that's just a straight TO3 sell signal. At today's close, it's worth $1,300. All you had to do is know the TO3 sell signals, which you can get from the website every single day when markets are open. Here's the Euro GPY. This took off on a TO3 plus sell signal, which is why you need to be subscribed to the TO3 plus package. Lots of money. This has just been amazing. The dramas around the Japanese yen, I've talked to you about it before, and it's being wrapped up in the dual imperatives that the governor of the Bank of Japan is holding interest rates at the old nominal levels that we've all had for the last 8 or 9 years. He's still doing that, and of course the pressure then is on the on the yen, and it's just been flirting with 150 on a few occasions on the cross rates with the US dollar. That's not this chart, and the fight goes on, but it's just beautiful volatility, isn't it? I love volatility. Volatility is what just makes these trades huge. Have a look at this. This is the Euro US dollar trade today. We had a TO3 sell yesterday, which was elected. That sets up, and look where it went to. Exactly went to the first support at 99,880. Then it busted through that today, went down, hit the 92,334 red line, stopped like it was shot, reversed, took off, whoosh. Look where it's at, and look how accurately it is. It's these blue lines. There's usually someone who doesn't know what they're talking about that says, oh, well, if you put enough blue lines on, the market will react to one of them. That's not the point. The point is what the market does at these blue lines. It's the way the market will touch them and stop there. It's the way the market will touch them and make a minor retracement, as this one's done, where it had target recognition not only at the high of the bar, but at the close as well. That's a real show out for what we call target recognition. And if you've read that article, The One More Thing, which is available at the website, you understand that this is a prerequisite of any market turn. And it goes on to be continually sensational. And if you'd like to examine that proposition, you can go to the website and have a look under the tab that says Chart Archives, where there are over 40,000 charts, all of which I have created for you, our members. And you will be hard-pressed indeed to find a chart that has turned anywhere except at its Danielcode numbers. This is the British pound USD, the so-called loonie pair. Have a look at it. Exactly the same. Elected TO3 plus sell signal. That's elected. Down it goes. Stops at the red line, 1332, 1.1332. Stops just about exactly there. Sets up the flip me for the next day, and off it goes. This is the Kiwi, New Zealand dollar, US dollar. More of the same. TO3 plus sell signal. Probably a TO3 sell signal, actually, I think. That was elected. Stopped at the red line. Round it goes. Up. Bang. Flip me elected. Keeps going. This is the dollar Canadian USD CAD. We should have been through this. This is the loonie. I must have called something else. This is the same. TO3 buy signal. Stopped at the red line, 13546, plus or minus a handful of ticks. Sets up the flip me sell for today. 1 day down, elects the flip me sell. There it goes, keeps going. Easy money, folks, and a lot of it. Have a look at this beauty. This is the dollar yen. That's what I was talking about. It's running away from its 150 very, very quickly. Is this that huge reversal bar you saw from 151.90 about in the center of this chart? That was combined intervention by the Bank of Japan and the Federal Reserve. I don't think anyone's going to put their hand up for that, but it has all of the features of that. And look at this today. This has really, really gone on with it. The TO3 buy signal was 3 days ago. That's the maximum. And you can see it was elected. Let's see if I can bring this chart up on the other computer so I can be a little bit more detailed with you. Here we are, dollar yen. So the TO3 buy signal was created from November the 2nd, and it was elected on November the 3rd. And after that trade has been elected, it has 3 more days to get to the flip me point, which was actually Tuesday. This week was the point at which time expired for flip me, but fortunately on that date it elected the flip me trade. Didn't look very exciting. Closed just right about on the entry point, rallied against the entry the next day, but didn't create another signal. And then today, it's really let go big time. So that particular trade, which is of great interest, has actually run out at about $3,200 per one contract. Nice business, isn't it? All you had to do was know about the TO3 plus signals and have been watching these webinars. If you haven't, you should remedy that matter. Okay, let's move on. This is the US dollar index. Had a monster of a day today, didn't it? Same thing again. It had a TO3 buy signal, which was elected yesterday. Very, very weak up bar. Set up the flip me for today. Down it goes. Straight to its blue line number, 107,585, plus or minus a few ticks. Precision, volatility, and the more volatile markets get, usually that means they just churn through support and resistance. Not with the Danielcode. It makes the market, it makes the acquisition of targets even more exact than they normally are. And that's a big difference in it. Here's the S&P from today, same thing. We had a TO3 sell signal on Tuesday. It was elected on Wednesday. Didn't show a change of trend from Wednesday's bar. Flip Me came into action and was elected today. That's day one, and all valid. Off it went. Made a lot of money. How about gold? All you gold bugs, you must be roaring. The TO3 buy signal for gold was some days ago now, and here we are. We're looking at it. It was the bar of November the 3rd, Thursday, November the 3rd, set up a TO3 buy signal, which was elected the next day, and it's essentially gone straight up. And it's now worth about $10,800 per one contract. And that's the biggest move we've seen in gold for a long time. And what's that all about? Well, weakness in the US dollars converted into strength in the gold market, the gold futures market. They're inversely correlated. You've heard me talk about it time after time after time. And what that means is that as the dollar goes up, gold tends to go down. As the dollar goes down, gold tends to go up. And this has been just a massive rally, more dramatic actually than the demise of the dollar. And because all the big price action of the dollar, the bulk of it was today, gold's been having big price action all the way up from its TO3 buy signal on, I think I said it was elected. Yep, November the 4th. Great stuff, isn't it? Easy for you to do too, folks. You get Greg Palladini. These are great examples of trading the DC signals, including Flip Me, and avoid listening to the media noise. Absolutely right, Greg, and I'm so glad you raised that point. What I tell clients is that, and Greg's one of them in particular, that the best markets to trade are those that have the least commentary. So that's come up with at least one really good reason, perhaps the only good reason, to watch CNBC Squawk Box. Whoever they've got in there talking about it, don't trade that market. Run away. Trade something else. And it's the markets that don't have all that noise. Because don't forget, there are literally hundreds of thousands of day traders sitting out there thinking they're going to be a successful trader from listening to the news or getting a early feed from AAP or something. Doesn't work. Doesn't happen. This is not about news. These signals were. This signal was created on November the 3rd. Thursday of last week. There was no chatter about elections and reduced CPI print or anything then, but the signal was created, it was elected, and off it's gone. Follow the market. Trade the Danielcode signals. Don't listen to news. It's a waste of time. Okay, keep moving along here. Thank you. Got that one done. We need to move to the next one. And here it is, Germany stacks. Now, have a look at this, folks. Not many of you trade this, but there is a mini index now. This is the main index. Have a look at this thing here. I mean, you had a TO3 sell signal back on November the 2nd. That's the same signal we've just been talking about. It was elected. Start the count. Day one's the day after it was elected. Day two's the day the Flip Me signal was elected. It's worth $18,000 per one contract, less on the mini contract, but this has been a marvelous trading market, and very, very few of you trade it. And it's a market that has far less commentary on it than the than the American equities. I can assure you of that. Here's copper. Same thing. You must be getting sick and tired of me saying this, but it's only repetition that gets these ideas through to you. Make sure you're looking for the TO3 plus sell signals. There was the sell signal. That's back a while. Here's copper. That was on same date, November the 3rd. Seemed to be like a universal sell signal on that date, wasn't it? Well, the flip me signal here got elected the very next day. Straight up, big bar up, inside bar. Outside bar didn't affect anything because it was just working off the inside bar. Another bar up again today. And I've got on here $6,600, which is about what it was when I did my early download, because I start doing this webinar for you at 4 o'clock in the morning, which is you're off daylight saving now, so it's 1 o'clock 1 o'clock p.m. in the States in the market. So I did this at about 3 p.m. US market time. Perfect trade, wonderful trade. Yeah, big money. Silver. We've been talking about this. I've been talking with Greg Palladini about this at the webinars, saying that silver is a much better market than gold. It's got much cleaner signals. It's more reliable, and it hasn't got the endless chatter that goes on about gold, which sparks up all those mini traders. So same thing. TO3 plus sell signal was elected, and immediately turned around the very next day. The flip me signal was elected, as you can see. Nice stuff, isn't it? That would have been the same signal we're talking about. November the 3rd, it was elected, the signal. Flip me was elected the very next day, Friday, November the 4th, straight up, $8,300 per one contract. You got to love this stuff, folks, haven't you? Are you getting sick of it? US T-bonds, Mickey D's favorite. We got a TO3 buy signal straight off. This is not a flip me. This is just an absolute standard Danielcode trade signal. Had a little twist in it though, because that signal was actually created from Monday's close, November the 7th. Excuse me, the hay fever's savage today, and we're in spring. The TO3 buy signal was created at the close of November 7th. The very next day, that little outside bar, the market elected the trade. That is, it went one tick above the true high of the setup bar. So that means that technically it elected that trade. For us, it didn't, because I use a buffer of 2 ticks above and below the true highs and true lows of the setup bars. And that's not part of the Danielcode. That's just a Needhamism. I started doing that 20 years ago. We had a run of markets where we kept getting filled by 1 tick and then they reversed. So one day I got annoyed about that and started using a 2-tick buffer. That's just my personal preference. You don't have to do it. Technically, that trade was elected on the little outside bar that came on November the 8th. In any rate, either way, you were long. If you weren't long, then you got long 1 tick higher the next day, and it's exploded for about $4,000 in T-bonds. We're going to have another look at one of those T-bond charts a bit later, and some other things to think about. Watch the correlations for you guys who've done a Danielcode time tutorial. If you look at the equities, not all of them created a time buy signal. In fact, the NASDAQ, the Russell, and the S&P did not create a Danielcode buy signal for today. But if you look at the Russell, it most certainly did. So be aware that markets, equities, US equities and Germany's DAX are highly correlated. And if you see a signal, a DC time signal, in any one of the equities, you can trade it in any of the others, provided that the trade is elected. Very important. If you didn't see a time buy signal in equities today, you weren't careful enough. Go through all of the equities. If one of them has a time buy signal or a time sell signal, it can be executed in any of the other markets. Russell, Dow, NASDAQ, S&P, and Russell, Dow, and the Dow. Russell, Dow, NASDAQ, S&P. Russell, Dow, NASDAQ. What am I missing? Russell, Dow, NASDAQ. Oh, Germany's DAX. Add Germany's DAX. It is so highly correlated with the US equity markets that a trade in any one can be elected or executed in any other, provided the trade is elected. So watch those correlations, folks. Sometimes it's a little tricky one like this that gets you a whole lot better than average. Keep watching these charts. This is important stuff. What you've got here, and I showed you this before, the chart on the top is the US T-bonds, 30-year T-bonds. The chart at the bottom underneath is the S&P Emini. And there is some degree of correlation directionally in these two markets. They're not highly correlated. They're not turning in the same places. The S&P is working off, was later but putting in its top and earlier putting in its low. But think of it this way. The chart on the top is the government. The chart at the bottom is free enterprise. In other words, the government has immense control over what US T-bonds are doing. For a long, long time now, all the way back till August or earlier, they've been pushing the bond market down, down, down. In other words, interest rates going up, price going down, interest rates going up. Bonds have, the UST bond has the inverse relationship. The price of the bond, the price chart, which is what you're looking at, is the inverse of the interest rate. So this market running down means interest rates are being pushed up, and vice versa. And you can see this big blast off today, starting 2 days ago, is on the narrative that the rate at which interest rates are being increased in the US will be reduced and slowed down. There's absolutely no independent evidence at all to say that's the case, but that's the narrative that's taken hold, and a large, large percentage of the trading population, particularly the big boys, they follow these narratives and they trade on these narratives. Okay, let's move on. This is what Zero Hedge and Bloomberg had to say about it today. He's been listening to Trump too much. I'm starting to do this. Very, 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 very. One very is enough. Two veries does not make it stronger, nor does three veries or indeed four. But in fact, the core CPI print moved by 0.1%. That was it. And then this massive rally in stocks and bonds. There have been only 7 other sessions when the portfolio between stocks and bonds, which is the traditional 60-40 portfolio, when it jumped more than 3%. That's happened only since 1988. There have only been 7 other sessions. Enormous day, isn't it? That's from Bloomberg. But keep in mind, the forward returns after these big rallies have been poor. So CPI stoked the market's rally, and then the Fed's Laurie Logan poured gasoline on that by signaling the Fed would soon slow its pace of reduction. So here we are. This morning's CPI data were a welcome relief, but there is still a long way to go. And then he said, or she said, isn't it? Yes, it may soon be appropriate to slow the pace of rate increases. This looking at the Fed business just leaves me absolutely cold. There are people who spend hours, if not days, trying to interpret or parse, P-A-R-S-E, what the Fed's saying. It's pretty simple. Just look at the chart. You don't have to be a Fed whisperer. The chart knows it all, and the chart is telling you. Everything, every bit of information and knowledge is in the chart. This is the US dollar index, and as I say, the CPI, it rose less than expected, 0.1. I don't know if that's the be-all and end-all, but Wall Street cheered it may allow the Federal Reserve to get less aggressive with interest rate hikes. Not sure that's right either. Basically, a weaker, well, put the other side of it first, a very strong, or a strong, you can see this has been very strong historically. This chart goes back to 07. It's way, way above anything we've seen this last run up. The stronger dollar makes exports more expensive and imports cheaper. And the reverse, a very weak dollar or a weaker dollar, has the reverse effect. It makes exports relatively cheaper. And that's why all of the mercantile people, people who manufacture and export, they're always bellowing for a cheaper dollar, a cheaper dollar, a cheaper dollar. I wonder how much juice has been going on between Treasury under the lap of the Reserve Bank, the Federal Reserve, leading into the elections. Anyway, here's gold. This was a chart from very early this morning before we had today's bar on it, but it found support almost perfectly at the 1628 Danielcode ratio, which stops all markets pretty much, and now it's roaring up. Be interesting to see how much juice it's got. This is the other market. This is the S&P Emini, and I'm showing you this to show you that the retracement we've had has stopped at the 50% retracement. You can see the second red line there at 3491.25. That's 50% of the minor range. In other words, that's the minor range from where it says January 2022, the high, down to the low of that pullback, which is what this particular tool is measuring. That's nothing like the whole range. That's not even part of the run-up since 2009. So it's a 50% retracement of a minor range. Does that sound to you like the bull market's over? Does that sound to you like that would be enough? As I said in my article, that may be sufficient for now. That determined bounce off the Danielcode number at 50%. And you can see you've got a key reversal bar on this 24-day chart at the moment. And that's very powerful. They're very powerful directional indicators. When they come off the Danielcode numbers, they're powerful indicators. Same thing. Don't go getting all excited about key reversal bars in the middle of La La Land or somewhere else. It's when they have contact. It's when they have contact with the Danielcode number that they become really relevant, and that makes them powerful. So key reversal bar on the 24-day chart now. That's pretty impressive. Was that a strong enough correction? I don't think so. Now, there are those who think that the market is going to make new highs. Amongst them, our very own Frank de Beer, who does the Sixth Seal commentary for us. Do I believe that? It doesn't really matter what I believe because I don't think that way. What I'm interested in is trading, and I just trade the signals as they are, and I love that. And honestly, if it didn't make any money, I'd do the same thing. It's just such fun. If you get good enough at this stuff, you can actually see it moving. Recently, I've shown you a lot of the micro support and resistance levels, and I'm working on a program now of reducing time down to daily bars. It's very, very exciting, folks, and I hope to have something to show you in the not too distant future. Speaking of the future, Terry has been working on incorporating FlipMe into one of our programs. It's not easy because of what you're asking the machine to do. It has to remember the signal. It has to know whether it was elected or not. It has to know where the failure point was. It has to remember that for X number of days, and it has to set that up within those X number of days. But I'm hopeful that we can have that on the website for you sooner rather than later. If you're not aware of it, crypto has been in disaster mode for this week. The big banger, Bitcoin, it's actually broken below its support around $20,000, got down to about 15,000 something. What's caused all that? Well, it's the latest drama with a very, very big player called FTX. And the two major players in crypto, in the crypto exchange space, are Binance and FTX. Binance is by far the biggest. FTX is the second biggest. FTX has been interesting because he's become a very big self-promoter. He's been the single biggest donator to the Democratic Party this campaign cycle. And he's been doing all sorts of other things which gain a lot of publicity, such as naming stadiums, bailing out some of the weaker children in the crypto space. But his company, that's ATX, his name is Bankman-Fried, David, I think it is, Bankman-Fried at least, but it's all been shenanigans. He's been using client funds to put into his trading entity, which was called Alamine, I think. I'll come to it. I've got something about it here for you. And he's acquired a large number of youngish people, 16 to 24, with the proviso that they're not formally trained in any finance. So you guys who've done Danielcode tutorials, no good applying, you know what you're doing. But these are kids who don't. But the belief was that by knowledge of crypto, they could be successful traders. Well, they've lost a lot. There's a massive multi-billion-dollar hole in this thing, not least of which is $6 billion that he took out of FTX and put into Alameda, it's called, so these young Turks could trade it. And they've done a lot. And that was client money. Well, of course, it's a very, very complex situation. Some of his companies are US-facing and are subject to some minimal level of regulation in the US, although that'll get a lot sterner very soon. The other ones are offshore, not US-facing, and no one's regulating those. Alameda was the one I'm talking about there, and the non-US facing version of FTX. It's all very, very opaque. Jamie Dimon had it best when he came straight out the Senate inquiry into cryptocurrencies and said it's a Ponzi scheme, and it is. Now, Bitcoin itself had some desirable attributes. First of all, it has definite limits. It can't go on increasing it forever. It has a defined limit of how many coins can ever be mined. And as well as that, it offers supposedly security. It's the exchanges where all these problems happen, not in Bitcoin itself. And also it does provide complete anonymity. So it's a great product for crooks and people who don't want to be found. But the reality is there's a huge number of very decent, normal people who are not crooks of any connection of the word, who value their privacy. They don't want the government to know everything about them. If you live in a country like Australia, you've forgone that right, because we are a quasi-socialist country and the government knows everything about you. They know what's in your bank account, they know what you spend your money on, they know what's in your credit card, and they can look at all of that with a push of a button, quite literally. America is the last of the Western countries where there is some hope of privacy. And if you let that go, if you abandon that, you are down the start of a slippery slope. And that's what happens. Anyway, so there's been a massive sell-off. FTX is gone bankrupt, or will be bankrupt in a few days, I suggest. And they're certainly considering bankruptcy proceedings. That's what looks most obvious. And it's another part of the crypto scam. This is not so much the crypto scam. This is just sheer, utter incompetence. The guy got too big in the head and tried to do too much and thought he was entitled to use other people's money. What it is, though, it's just another version of what we've seen so often in hedge funds. Rehypothecation, where assets are pledged to more than one lender. Trading minor coins. What are they trading for? Well, some of them get some relief from fees and make them a little bit more attractive, but there's a whole lot of them that are touting very substantial interest rate payments. And the promoters maintain that they're earning those interest rates by lending out the coin to a third party. And we're talking sometimes 12, sometimes 18%. Absolutely ridiculous. The fact is that the Bitcoin is a product in search of a reason. And apart from what Bitcoin itself has, the copycat coins, which is what it supports, the vast majority of that whole genus, they're trying to find a reason for them. Making a few dollars by lending them out, is that a good idea? Well, it is if you're a good enough person to assess you got the banking skills to assess the credit worthiness of the person who's doing the borrowing. I suggest, and what we've seen from reality is most of them don't. So anyway, you're going to read more about that. I thought I'd just let you know what it's all about. The biggest Democratic donor, they've been absolutely massive. Excuse me. And what really crushed it all is FTX went to their competitor, Bitman, who are the biggies, Binance, I should say, who are the biggies in the business, and offered them to have a look at their balance sheet, to take them over. And it was a non-binding letter of intent. Well, you should know better than that. You let someone have a non-binding look at your internals, you're going to get exactly what you deserve. And Binance was smart enough to go out and very quickly release a statement saying they've had to look under the bonnet and they just didn't like what they saw, and they can't, it's beyond their capacity to assist with them. So that's really put the cat amongst the pigeons and driven that down. Who are these players that have put up these billions and billions of dollars? It's absolutely incredible. BlackRock, Ontario Teachers Pension Plan, SoftBank, Tiger Global, Sequoia, who've written off, they're in for about 260 odd million, written that off to zero. Singapore Sovereign Wealth Fund, Temasek. Who's doing the due diligence for these people? Well, there is no due diligence. It's simply who else is into it. We've got to have a piece of this. And it gets worse. Tom Brady and his ex-wife, Giselle, bought into the company. And Bankman-Fried kindly made Brady an ambassador at large, and Giselle is the director of, I don't know, special events, and seems to me money for nothing, but that's what this business is about. But they bought into the company. They've lost a lot. Interesting stuff, isn't it? If it wasn't so tragic, it would be laughable. There is just very hard to get your head around all the stuff that's going on in the crypto space. Very hard to understand the motivation of rational people like BlackRock, like Ontario Teachers Pension Fund, like SoftBank, who've been burnt often enough they should know this, like Tiger Global, like Sequoia, like Temasek. What did they see there? What would possibly entice a rational person to be investing massive sums of money? Where's the earn? Where's the money coming from? Is it just in hope of a capital gain? Yes, it is. That's about all it is. It's the hope of a one-way bet. Anyway, folks, the good news is that it's all good news for us. There is no inflation in trading futures and Forex. Our markets pay exactly the same going down as going up. Interest rates really only affect us as T-bond traders, and trading in T-bonds is still fabulous. Equities going both ways are far more interesting and profitable than the one-way crawl. And drama and fiscal catastrophes just add to volatility. And volatility is our friend, it's our lifeblood. So happy days. Learn to trade Danielcode now. I will be happy to teach you, and you will have a life of wine and honey. I think that's the expression. Okay, so this is all about it. We've been happy to split the Danielcode tutorial into two parts, and that's reduced the fee proportionately. And we've got a number of people doing the tutorials now, one half at a time, and that was the purpose of it. Be delighted to teach you everything you've seen here. If you'd like to learn how to do it all, you will learn that at Danielcode tutorial. Email me, jneedham@thedanielcode.com, to make your reservation. Okay, so remember, the business of trading futures and forex is not to be right. The business of trading is making money. That sounds like they're a contradiction in terms, but it's more sophisticated than that. So thank you, folks. If you haven't already done a free trial, please go to the Danielcode website, www.thedanielcode.com. Click on the free trial button. Hit the register button there. Any issues? If you've already had a free trial, the machine will probably remember you and won't want to give you another one. It's a bit cranky like that. But any issues, contact Terry at support@thedanielcode.com, and he will sort all of those issues out for you. And finally, this is our standard disclaimer. I do ask you to read it. I do ask you to take it seriously for your own financial health. It is very, very easy to lose money trading in derivative markets if you don't know what you're doing. It is equally easy to make an awful lot of money in derivative markets once you do know what you're doing. Make sure you understand the difference between those two statements and get yourself up to speed on everything that is important for you. Okay, that's us for today. Let me have a look. We've got a few questions in here. Here we are. Here's Akshay. Missed the last webinar. Watched the recording. Interest rates, couldn't agree more. The proverbial carry on the tower. Yeah, great work. Keep it up. Thank you. I'm glad you like it. Glad you could make it to do today, Akshay. That's grand. Let me see here. Yeah, there's Greg. How many other pension plans out there investing in such high risk? The reality is they don't understand it's high risk, Greg. That's the problem. I have my wife and my children telling me, why aren't you into crypto? Why aren't we doing crypto? My hairdresser's boyfriend made so much money out of it. Well, they don't raise the flag to wave at dollar when they've lost the money. But I promise you, they're losing a lot more money than they ever made. People, decent people, are quitting their jobs and thinking they can make a living simply on sitting on these crypto-type coins that pay big interest rates. It's absurd, extraordinary. Quit your job and learn to trade the Danielcode. That'll give you a better lifestyle than you've ever dreamt of. That's it for tonight, folks. Noel, I see you've left. Great to have had you with us. Thank you, folks. Mickey D, terrific. Was terrific seeing you last week. Greg, lovely to have you with us as always. Enjoy your weekends, folks. For me, I'm just about off the clock. I've got to update all the charts that ran off the members' charts with all the volatility we've had. But it's midday on Friday down under. It's a beautiful day. The sun is shining. It's short sleeved and the swimming pool is starting to look very delightful. Enjoy yourselves. I'll talk to you all at the next session we have. If there's anything in particular you'd like me to discuss on these webinars, please feel free to send me an email, jneedham@thedanielcode.com, and I will endeavour to meet your requirements. That's it for today, folks. Thank you so much for being with me. Bye-bye for now.